the market, in the meantime, initially today, it opened much lower. We were indicating down 200 points because of China's tough talk on trade. But a bigger risk probably is China's economic freefall. I want to bring in SureVest CEO and Chief Investment Strategist Rob Luna and Kingsview Asset Management CIO Fox News contributor Scott Martin. You know, guys, as much as we talk about these tariffs, every single day this week we have seen evidence of China's economy imploding. Today's, I guess, the biggest evidence is Baidu. The Google of China, first time they lost money in 15 years. The stock is down 16%. It was already getting crushed, Rob. I think there's some serious issues in their economy that have nothing even to do with our trade tariffs.
Yeah, Charles, I mean, you took the words right out of my mouth. That's exactly what I was going to say. I mean, Baidu, and let's think why Baidu is so important. It's really hard to trust the data that we're seeing out of China. I think everyone's very skeptical. But when you look at a company like Baidu now cratering, and like you said, they haven't reported a loss since 2005, the Google of China, I think this is underlying weakness that we're seeing in the Chinese economy. And they're going to rattle those saber over there. I don't think they're going to, bow down at any point in time. That being said, I think it's in their best interest to get a deal done. Like your previous guest was saying, probably not next week, probably not next month, but in the next 3 to 5 months, I think something comes out of it. So, Scott, you got China facing a three-pronged problem here. Their economy is sinking rapidly. Now many economists are saying they won't even do 6% growth this year. There's the trade battle that we have, but also solutions or lack of options for a solution. Their debt levels are at astronomical points right now and probably going to get higher.
Yeah, they're rising, Charles, to stimulate the economy. Obviously, still doing some currency manipulation out there as well. Government obviously has its hand in some attempts at growth there. So you're right. I mean, as Rob Luna said, the evidence is there in the stocks. And I would say, too, Baidu is one example. I mean, Alibaba, again, like you had some good numbers recently, but still can't seem to rally very hard amidst what's this backdrop of China weakness. So to me, yeah, they've got to figure out their trading stuff. And I love the news out of USMCA today because that's something that we can put in maybe the rearview mirror going forward and now really direct our focus to this China deal, which I think is essential, though, to help the S&P 500 recover from the recent fall.
Yeah, I think we're all on the same page there. I tweeted 2 days ago on Twitter. I said, listen, I'm with you on China. We got to resolve USMCA. Now, let's juxtapose all of this, Rob, to what's happening here. This morning, one of the reasons our market made this remarkable reversal, I know up 23 is not much, but when you're down 200, it is on a Friday afternoon. We saw Michigan sentiment go to a 15-year high. It absolutely surged, and the component that lifted it was the expectations. American consumers expect things to get better over the next 6 months, and that bodes very well for the market, doesn't it?
I mean, it does, Charles, if you look at the numbers, look, they have jobs and they're starting to earn more. So that makes a lot of sense that that's going to happen. And like you said, I mean, 200, not a big deal. But what's really impressive, Charles, is this market has had reason after reason this week to sell off. It's held above the 50-day moving average. We're right in this range. And let's remember, we're just a few percent off all-time high. So with this type of news and the resiliency we're seeing from the market, if you're an investor in U.S. stocks, that should give you some conviction right here.
So, Scott, how do you see this playing out? I think the big intangible that everyone will acknowledge is there could be a tweet on Sunday that could send this market up or down a few hundred points. So there's a certain anxiety that's hard to build into any sort of investing model, particularly short-term, right?
There is, but as you know from our previous conversations, Charles, there is stuff that works. I mean, there is shelter in the storm that I believe, given the uncertainty, given the Sunday night tweet risk, I guess it is, or Saturday Night Live tweet risk, whatever we call it, that uncertainty out there that could push the S&P up 20 or down 20 should be mitigated by holdings in gold, which we have, GLD, and holdings in things like utilities, XLU, because those are areas of the market that have been very strong. As rates have gone down, as panic sets in, that helps limit your volatility exposure.
Real quick, Scott, I got to go, but are those hedges or primary positions for you?
So the utilities is more primary, but the hedge is definitely in gold just because of the fact that when there's panic out there, folks tend to buy gold. They buy the yen. FXY is another ETF you can look at there, too, in times of panic.
Rob, Scott, gentlemen, thank you both very, very much. Appreciate it.